asking in the hallway, when did you start TRI, your own company? And because you stopped working for the IRS in terms of training IRS agents, you stopped working in the late 80s, correct?
That's correct.
And so you've been self-employed and have your own corporation ever since. The question I want to ask you is, I remember coming back from a deployment and wanting to file my tax returns so I can get my tax refund back. Why do millionaires never look to get a tax refund?
Well, first of all, millionaires do look to get a tax refund, but what millionaires have that the average person doesn't have is they've got a whole staff of people working on their taxes and on their finances. That's the one really critical thing that a lot of the very, very rich do. And one of their favorite things to do is to meet with their accountant, which sounds strange.
Right.
But that is exactly one of the favorite things that they like to do. So they try very hard not to get a refund. They try by getting maximized deductions so that they don't have to get a refund. Remember, you get a refund, you don't get interest on that money.
Correct.
So they try very hard to make sure that what they pay in is equal to what they owe, and they minimize the amount they owe so they can keep as much in their pocket as possible. But if they're due a refund, believe me, they want it.
It's a much different mindset.
A much different mindset. The millionaires, they know they're going to pay a lot in taxes, so they do everything they can to take advantage of every tax deduction that's available to them. And the sad part is that self-employed people are way overpaying their taxes. Don't take my word for it. Forbes published an article where they mentioned 93% of self-employed people are overpaying their taxes based on a study that Forbes did. I mean, John Potter, former head of the American Institute of CPAs, said self-employed people are overpaying their taxes. It's common knowledge, and it's just something that self-employed people really need to understand. And more importantly, employees need to understand why they should be self-employed, because they can get the same benefits as a self-employed person, whether they are working, and this is an important point, whether they are working full-time or part-time. As long as they're running their business like a business and they have the right documentation, they get the same benefits of a full-time worker.
So instead of working a second job or third job, work on a side business, what we call a side hustle.
Absolutely. I don't see why more people aren't doing that.
You know, let's stay on that point, because I remember in the early years of my working for myself, I was enjoying these massive deductions, and I'd make a lot of money and I'd enjoy these tax deductions. But when it came to apply for a loan to buy a house, I had to refile so I can increase my income, pay more tax, just so I can qualify for the loan. So how do self-employed people, entrepreneurs, play that game of maximizing the deductions, but at the same time to have enough showable earned income, so therefore they can qualify for the dream home?
Well, first of all, if you're making enough income, it won't be a problem. So even if you maximize your deductions, you'll be making enough to buy the house all cash. You don't even have to get a loan, all right, which many people do, okay? But the second option is the bankers are not that stupid. They will understand that self-employed people have lots of deductions. So you just have to point out the deductions that are self-employed available, and especially the ones that are non-cash deductions. You know, self-employed people can get deductions that don't take any cash. A good example being depreciation. Depreciation doesn't take any cash.
Sure.
And they have to, emphasize how important that is when a banker looks at the deductions and say, oh, some of these are non-cash deductions like depreciation, amortization, things like that. And they should filter that in computing whether they can afford the home or not. But more importantly, again, I wouldn't worry so much about, oh, gee, can I afford the loan, therefore I'm going to refile. No, I would simply focus on not just increasing your deductions, but making as much money as you can so you can pay cash and not have to worry about that nonsense.
So you mentioned car. I wanted to touch on that because one of the most watched videos of our last year was taking your guidance and creating your car to be a tax deductible machine if it's incorporated for business usage. So people can use that opportunity to purchase their dream cars much sooner and faster, much less than what they were doing as just a standalone employee where they couldn't have a $600, $800 car payment deduction for a Honda Accord or something like that. So what are some of the key areas that people can use towards creating their car to be a tax deductible type of opportunity?
Okay. Well, first of all, let me mention that I'm giving general tax advice. This isn't absolute tax. This isn't the tax opinion per se, as a whole formal thing. But cars are one of the biggest write-offs around. I mean, they generate over a lifetime hundreds of thousands of dollars of write-offs if you know what you're doing, literally. Yeah. And what's even better is that cars used to be limited as to what you can write off. For some reason, Congress had a thing about allowing people to write off luxury cars. So for example, if I bought a BMW, $50,000 BMW, under the old rules, it would take me 18 years to write it off.
Wow.
That's the way it was for many years.
Yep.
All right. In 2018, we had this tax reform law. And what they did is they did some very, very important things. Number one, if you're in business and you're writing off your car, whereas employees cannot write off the car, right. they've tripled the amount of depreciation deduction that businesses can take. So that same $50,000 car, which used to take 18 years, is now 5.2 years. Okay?
Nice. Yep.
$100,000 rolls can be, 10 years. So it's greatly accelerated the write-offs for almost any car that's used in business. The second thing they did was they created certain winners. There are certain winners where instead of taking a write-off over 5 years or 6 years or 8 years, you can write it all off in 1 year.
Wow.
Winners are qualified vans, SUV, that's why you're seeing so many SUVs on the road, and qualified trucks. You get those three things, and you can write them, and they're qualified, and use them in business, and you keep a good mileage log as to what's business and what's personal. You can write off 100% of the business use in the year you buy it.
Amazing.
And what's interesting is it doesn't have to be a new vehicle. It could be new, as long as it's new to you. It could be new or used. And what's even more interesting is that you get this write-off whether you pay cash or you finance the car. So I can get a qualified SUV. Let's say I get a Cadillac Escalade, which is a good example of that, by the way. In fact, every accountant I know is buying a Cadillac Escalade. Let's say you buy an Escalade, about a $60,000 Cadillac Escalade. Use it 80% for business. You can write off $48,000 of your Escalade, whether you pay cash or even if you finance the thing over 5 years, you still get that write-off in the first year.
Does it matter how you finance it, whether you get a loan or a lease?
Makes no difference. Now, lease is different.
Okay.
Well, a lease is different. If you have a lease, you don't own the car. So at that point, you don't get depreciation. You have to write off the lease part of the lease payment.
That's all you got, though.
That's it. Plus gas, plus oil, plus repairs, and so on.
But you only get that nice depreciation write-off, which I think
you only get that nice depreciation when you buy the car, which raises a very good point. Generally, it's much better off, and you get a much better write-off when you own the car than when you're leasing.
Gotcha.
That's particularly true after the new tax reform law has greatly improved the deductions for owning a car.
I run a sales organization, so we sell insurance, retirement services, et cetera.
Sure.
And we create incentives in our compensation to make our agents more productive. And so the way I'm looking at countries now is the tax system, because in my opinion, that's a form of compensation. So I can make money in this country, and this country is now incentivizing me how to make this money and where to spend the money. Am I looking at that in the right
You're
lens?
looking at it absolutely.
Okay.
But what the government is doing here is the government is giving you cash, giving you money to incentivize you to be in business that they're not doing for employees. And that's exactly what's going on. And you might wonder, why is this? Why is that happening? Why is it that a self-employed person can have 20% of their net income they don't have to pay tax on, but an employee has to pay tax on everything from $1? Why is a self-employed person has to pay tax on their net income? This is after they take the deductions, whereas employees have to pay tax on $1. And the answer is that the government has realized that self-employed people, and I'm including small business, corporations, I'm talking that whole gamut of small business people, are the economic engine behind the economy. It's not IBM. It's not United Airlines. It's small business people like you and me. There's an old saying, from little acorns come big trees. And take an example like Amazon. Amazon didn't start big. It started out of Jeff Bezos' garage. And Microsoft also started from very small. From small acorns come big trees. And that's why the government subsidizes self-employed businesses and small businesses.
Yeah, the creators and the generators.
That's correct.